Hello everyone and welcome to Day Trader S&P 500. This is Dale Woodson, one of Timer Digest's top ranked stock market timers. Today is September 27th, 2020. And while I've been trading for over 30 years, we have our day trading service here that we just started 3 years ago. You can see our track record there. Awesome start down year to second year, and we got off to a great start in year 3. And we have a lot to cover today, and we want to also let you guys know that I average over 700 trades a year, and sometimes as many as 30, 20-something, 33 trades in a day. Stryker Securities does auto trade our account, so if you don't want to sit in front of your computer all day, you can auto trade Woods and Wave report signals with Stryker. And while we've been in the trading business for a long time, we're new to YouTube, so we appreciate if you guys hit that subscribe button, the reminder bell, and the like button. We appreciate your support for our channel. We have a lot on the docket today. We want to start with the S&P 500 today. We're going to cover the S&P. We're going to cover Tesla. We're going to cover gold. We're going to cover the Nifty, something completely different, right? So we want to start with the S&P. Excuse me, this is a weekly bar, and this is the January 2018 Wave 3 high. Just to review, we had an expanding triangle, and we had, we'll label that out for you guys. We had an A, a B, a C, a D, and an E. That marked the end of Wave 4. And this move up here is the beginning of Wave 5 in the S&P. Okay, this is a weekly chart, and this is the March 23rd low on a weekly, and this is the most recent September 2nd high in the S&P. That's on a week. It shows August 31. So we'll go to this first wave up right here. Here we go. That is the March 23rd low, and that is the September 2nd high. So if we can count that a completed 5 waves. We'll do that here for you guys. Just a little review before we get into a little more drilled down approach, if you will. So we had a 1 up here, a 2 down here, a 3 to that island reversal, which fooled everyone, including me. We had a 4 down here, and a 5 up to September 2nd. So if we get our Fibonacci retracements out, we can see where this should go. And being a little slow here today, but here is our low, and there is our high. And that's what we're looking at here. A 382 gives us a little over 3,050. A 50% gives us 28.95. And a 618 gives us 27.30. So this should be 1. And this down should be 2. And we'll have to really watch this decline because it could develop into something bigger. But for now, we're going to call it a second wave of correction of this first wave advance. So we can look at the price action from that September 2nd high. And here it is here. Okay, and this is a little more tricky. But if we can get our extension in here, we're looking at an hourly chart. There's our first wave down. Right to there, and there is our second wave up. Okay, and as you can see, 1, 2, 3 should at least gain equality with 1, and that puts us at 30.53. I think I did a little more accurately, 30.40 or 30.43, 31.43. My apologies, but this is not quite complete. It is interesting that it hit right at the 786 Fibonacci retracement, but even if, let's call this the most bullish scenario. It's a 3-wave decline, and it's over. At a minimum, this would be Wave A, this would be Wave B, and Wave C would either gain equality or be a 1.618 extension. So it's not quite done yet. So since this appears to be 5 waves down, 1, 2, 3, 4, 5, this could just be the first wave of a 5-wave decline. This is where it gets a little tricky analysis. You can see this retracement up is an A, B, C, and I have in red where C equals A right here. Here it's a 1618, and these black numbers are the Fibonacci retracements of this 5-wave decline. So you can see that it, well, I take that back, it's not, and let me clean that up. Let me clean up the extension here, and we'll get those Fibonacci retracements of that 5-wave decline here shortly. Bear with me. There's retracement tool. There's that high, and there is that low right there. So you can see it's already reached the 382 retracement, and it's right where C equals A, which is in between the 50% and the 382. So while this can go higher, if it's a second wave retracement, it shouldn't go much higher, and we are bearish short term against this second wave high. So this could be complete now. We'll have to watch and see if it plays out. If it is, we expect this to go down to that 3043 at a minimum. And there's a lot more going on here. I want to show you guys a little Fibonacci as far as time goes. Yeah, we've got all that on the screen. Okay, so we've been looking at the Fibonacci time spiral. As you know, I did this originally back in 1998, and it called the low and all the turning points to the day, within a day. And so far, so good with this one. You can see up here, we have our all-time high September 2nd, and the first wave down bottomed on 9/11. And our Fibonacci time sequence, 8 days after the high, gave us a target date of September 10th, missed it by 1. Okay, that marked the wave down. Our next date in the sequence was September 15. The market topped on September 16, again with a +1 day. Our next target for down, it's alternating up, down, was September 23rd. Bang, there the market again with a slippage of +1 day, excuse me, to 924. You don't need to know Elliott waves or Fibonacci multiples or extensions. If this plays out, we can look for this market to go up into October 6th, which just so happens to be in 8 Fibonacci trading days from the low. So we'll see where this goes. This is where we're at a critical point. You can see here the second wave ABC is right there at 3302. It closed just below it on Friday. There's our Fibonacci retracement targets of this decline. It could be just one of 3 as I have it labeled here. It could be an ABC. A, you see there, B, and C. Again, it should go to 3148 or 2976. So it should be an interesting week to see where this goes. If this thing moves above the September 16 high, then this decline is over and we're going up, up, up. So we'll see how it plays out. That's pretty much it for the S&P. We want to give a look at Tesla. As you know, we've been counting everything from the March lows. This is a daily chart of Tesla, and here are the March lows. But if we look back, there's actually a 5-wave impulse up here going all the way back to October of 19. We can call this a 1, this down here a 2, this up here a 3, this down here a 4, and this up here a 5. So it could correct not just the rise from the March lows, but the rise all the way back here in October of 19. So if it does, let me get, well here, let's label that for you guys here first. Well, let's get the retracement. Let's do that. I think you guys got the picture of the waves. Well, we can start here at the lows and move on up to the all-time highs. So now we're looking at, and not surprisingly, the first wave down bottomed right on the 382, and then we have a second or B wave up, and we're in a third wave down. I would expect that this would probably go to the 618. We'll do a little extension on that here in a minute, but you can see, and you can see this is 1, 2, 3, 4, and 5. So we can look at this, let's keep this on a daily, and let's just get a Fibonacci extension on that and see where we might expect Tesla to go. This is correcting more than just the rise from the March lows because this had a bigger wave in front of it. Okay, let's make those different colors so they're easier to see. Bear with me. Well, We can go to red. That'll work. Bear with me a moment while we get all this. We don't need these. We just need the extensions, the ones, so we can knock all those out. Okay. We need the 1 and the 1618. They are the most important. And we can knock off that 2618. There's the red. There we go. Okay. So we're looking at A or 1 down, B or 2 up, 3 or C equals 1 or A at 1287, which is near the 50% retracement, or 1.618 gives us a target price of 179. So we're looking at, if this is correcting all the way back to the October 2019 low, that's a 5-wave pattern. That's an A down, that's a B up. We got a 1287 target here and a 179 target here. Of course, our make or break would be the second or B wave high at 462. So look for Tesla to continue its decline as long as this high holds. We're looking for this to go much lower. And it's very interesting how it hit that 382 now that we started the advance from the the 2019 lows instead of the March lows over here. So that's what we got on Tesla. Let's go to gold. We're moving quickly here. Here's the March lows in gold, and we have a 1 up here, a 2 down here, and I've already got wave 3 mapped out. Here, I'll do that for you guys here. Okay. So this is our 1 up there. This is our 2 down here. And this is our 3 up here. Let's just put 4 down here for now. Okay, 5 is off in space. We'll just put it there to get it out of the way. Okay, so this is the 3rd wave, and this is our 4th wave correction. This is the 1st or A wave down. This is the 2nd or B wave up. So the 3rd or C wave down will equal wave A at 1799. We can call it 1800. That would be a nice place. It's again, it would fit the parameters, and our make or break on this is our wave 1 high, which is 1765. Okay, the 4th wave cannot, we'll illustrate this, break the price territory of the 1st wave high. Where it is there, it's not a 4th wave. Okay, so we've got a tight parameter, we've got a near target, and our target is 1799, and our make or break on gold is that 1765 level. All right, so we'll see how that plays out. This is an interesting 4th wave, but we had originally thought it was a contracting triangle, but it proved us wrong. And let's look at the Nifty here. The Nifty looks a lot like the U.S. indexes. It topped on August 30th. All the U.S. indexes topped on September 2nd, and we have a 1st or A wave down and a 2nd wave up. So let's do this. And I haven't done this. I don't know where this is going to land, but we're going to find out together here. There's the top. There's the 1st or A wave down, and there's the 2nd or B wave up. Okay. And that topped at 2nd wave September 16th. Surprise, surprise. And here we are on September 20th. Okay, ours were, the U.S. indices were on the 24th, so it's pretty close. But here's 1st or A wave down, 2nd or B wave up, and then we have equality here at 1110 and a 1618 at 10630. Let's look at this here. We've got a 1, 2, and then a 1, 2, 3, 4, 5, and then there's a 1, 2, 3, 4, 1, 2, 3, 4, 5. Yeah, it's breaking down in 5 waves. So let's see if this is complete there. Let's see what this would do for a retracement, and this could be 1, 2, 3, 4, 5. Yeah, they're all within 5 waves. Let's get a retracement there to see where this may go if that is complete. Okay, there's our high. Here's our Fibonacci retracement. Okay, the 382 gives us a target of 11105. The 50% gives us 11204. The 618 gives us 11303. If this 3rd or C wave bottomed here and we're going to get a five-wave decline, then this move up, which would be a 4, would not be able to violate this low, which is 11.85 and 15 cents. Okay, but it's quite possible that this is a 1, this is a 2, and this is a beginning of 1, 2, and that's where I think the S&P is. Okay, so we got our targets there. We'll get back to that that photo of the S&P, where this seems like it's most likely, where this is a 1, okay, and this is a 2 to that turn date, and this is 1 of 3 down here on the 24th, and then we'd get a 2, which could go as high as, not higher than our September 16th high, but it could go higher. Okay, we get a 2, then a 3, and a 4, and a 5. So it's going to be critical here the next week or so. See how these turn. We'll see if the market keeps going up into our October 6th Fibonacci time spiral turn date, and then if it'll turn on down into late October. That would be interesting, because that would mean the low would be right before the U.S. election, so that could have big implications. So anyway, that's all we have for this time, guys. Take care. Thanks again for viewing our channel. We appreciate your support. Reminder to hit that like button, and we'll talk to you next time. Take care.